Hello traders, this is Perry Wilkie with Startup Trading. I'm going to review in this video the support from yesterday's session, which was Friday, May 15, 2020 for the S&P 500 futures, the ES contract. So for the session and the bell, the low was made it during the bell session. That was at 2809 half. So this was a session as you look at it. So why was this support, and was there any clue? Well, I feel there was, and I talked about it during the week. So we'll go back and look at what made this support and something that traders often overlook and some things that they forget about or maybe never even realized. So to go in here, you've heard that some people are like people watchers or whatever. Well, I'm a trader watcher, and what I'm looking for is where traders are. So unlike most of the things in life that go on that have a starting and an ending time, in the stock market, in the futures market, there are always traders that are currently in positions, right? Everyone doesn't exit the market at the closing bell and then resume whatever they want to do the next day. They're carrying these positions from close to close, open to open. There's different trading, different time frame traders in the market all the time. So as we go through this, you've got to, put that into your calculus that there's some traders that have positions. So all these bars that you see behind here, and this is just a 1 year daily bar chart on the ES continuous contract with the extended session turned off. So what you see here are there are traders in here that have positions, right? There are always people, when you trade, you're either entering the market or you're exiting the market. You're either, long or short, and you're, until you do the opposite to get out of the market, you're in the market. So as you look back at these bars, right, the farther time progresses, the fewer traders there are that still have positions from the past. So the more recent action is more important than, something that happened, 5 years ago, right? So things that, there's very little likelihood that there's any day traders still trading, right, that are from February 19th or the 20th when these highs were made and we started topping off, right? Day traders don't hold through all this, right? They would have, it just doesn't happen. Now, longer term traders, of course, right? But a lot of the stock market is made up of shorter time frame traders, right? They could just be session traders. They could just trade during bell to bell. They could, maybe swing through the week, but they don't like to hold over the weekends. So this last candle here is Friday's action from bell to bell. So why was that low where it was, and was there anything we can glean on it, right? These are daily candles we're looking at. So we'll go back now and we'll look and see as the week progressed just what we were looking at here in the trade room, or I should say. So I'm going to really go back to Wednesday because Wednesday was the key to the market support for Friday, right? That may sound kind of strange to someone who is new to trading or really never really, questioned, what it is. These candles, there's hundreds of millions and billions of dollars in these candles, right? Both long and short. So Sunday night we open, we trade overnight. The shaded area is overnight trading. The non-shaded area is bell-to-bell trading. And as we progress up, Monday, right? Futures were high on Sunday night, right? Come back down. So during the bell, right? Futures sell off overnight. Monday during the bell-to-bell session, they go up to highs. They really don't get anything going, right? They kind of double top there. The session ends. Next session picks up, right? They take an hour break. Next session picks up. Overnight traders come in. They take it down, and then they take it right back up again before the bell opens. Next day the bell opens, right? Sit there. They lose it. They go across. They lose it again, right? They go across. They lose it again. Really goes down now, right? This is Tuesday. So Wednesday opens up, same thing. They come back up. They retrace a little bit, right? They come back. The bell opens. They, they dump it. take it back up, and then, short. But if you look at this distribution, and what I'm doing when I go through and do my work for the day is I'm looking a little bit more in detail of, how did this session trade? So some of the things that I'm looking at is how the profile really traded out for the day, right? So as we look out, and I shared with the members in at Startup Trading that, this is really the distribution I was going to watch from Wednesday's action, right? This was the most important. You can see the blue is the overnight action, the gray is the bell to bell, and you can see that as we fell down and we closed right here at 4:15, the futures were at 28.12 half, right? This gold line here, that's just where it ended at 4:15 Eastern time. All the times I'm going to talk about in this video are for Eastern or New York time. So just to clear that up. So I marked off for the traders and shared with them that really what you want to watch going forward when Thursday's session opens up Wednesday night at 6 p.m. is you want to watch from 28.18 quarter to 27.97. This is where the vast majority of the traders, they were stuck in this distribution, right? Whether they were long or short, this is the band that they were in. So coming back through, and some other things I share with people that are in the room that actually want the newsletter are the point of control for the day, and this is the area that has the most contracts go off, that had the most contracts go off. It was at 28.10. The session volume was 2.5 million shares, and the bell to bell on that one tick was 23,460. So, and when we go back and look, at that level, I'll zoom back in here for you, right? As we look at that level, right, that's it right here. This is that 28.10, the gray. This gold bar has no trades in it. It's just, where the gray is, that's trades. That's just a marker for me to look at. So this is your point of control, is what we call it in profile theory. That's where the most amount of contracts went off that day. And you can see it's fairly in the middle of that distribution, right? A little bit more towards the top than the bottom, right? It's 18 and a quarter points from the top, and it's 13 from the bottom, right? So it's I'm sorry, 8 and a quarter points from the top, right? That's how far it is to get up there, and 13 points down to get to it. So it's closer to the top of it than the bottom of it, and we'll go through that. So as we look out, right, at Wednesday's session, we can add these markers now of what's important to watch. So we can add that 28.18 quarter, we can add that, that point of control at 28.10, and we can add that 27.97 on to look at it. So this is where Wednesday closed, right? So we come into the next session, right? And as we're trading back across, right, this is the area that we said to watch, right? So you can imagine that as you're stuck down here, right, the futures open back up, we trade a little bit higher. We basically test this low that was made, during the previous overnight session. Traded it pretty much perfectly, come back down. But as you can see what happens going forward, right, traders really get stuck in this zone that I identified. Right, they go down to the 27.97 area, they get up to the 28.18, and they're just bouncing back and forth, right? They can't figure out what they want to do. So what you can imagine now, right, if you're long in here, you need to get up into this green area really to start getting paid, and you want it to go to this green area and above. And you can imagine if you're short, right, you don't want it to go that way, so you have stops in this area, right? So this is the green area is where the longs need to get to and above for profit, and it's also where the shorts should have their stops if they're smart. And then the same thing for the the bears. They need to take it down here and below, right? And this is where the longs should have their stops, right? Because obviously if you get long in this section, you think it's going to break out to the upside. If it starts going this way, you're wrong, right? So as we look at this coming into now Thursday's bell, right, we're bouncing around. So it's around 7:30, 7:45 in the morning, and we were down at this low again after, basically getting into it, hitting the top once, twice, three times, four times, hitting the bottom now, right? You've went through it, back in it. So again, two, three, four times you've been bouncing around here like a yo-yo. So we get in here, what happens? We come down as towards the opening bell, right? We start to lose that distribution, right? So the shorts should be happy, the longs should be freaking out or being stopped out, right? So as they come down here, and one thing that I didn't mention is one of the reasons I identified this also on Wednesday is 2.5 million contracts traded Wednesday between this band that I identified between 27.97 and 28.18 quarter. 1,160,000 contracts traded in this zone. Uh, Not above it, not below it, just in that zone. That's how much of the distribution was in there. So we come across to the overnight action, right? And we come across here as I'm seeing it, even though I see that liquidation break coming down and we're going lower, I look and I see that there were another the overnight action before the bell rang, right? The opening bell comes in right here. And as we did, there were 517,000 contracts that traded. 346,000 of them were between these levels. All right, I'm not counting these little ones that got up above. I'm not counting these ones that went down below before the bell rang. So you had 350,000 basically more out of 500,000 that traded after having 1.1 million trapped in here yesterday. So now if you're keeping track, you got, potentially 1.6, 1.7 million shares in this distribution now, right? And some of these people have exited, right? They're not all there. But you have to imagine that there's, quite a few stuck there. When you only trade 2.5 million shares a day and you've got that much in this distribution, there's some traders that are getting complacent thinking that they're going to get paid whether they're long or they're short. So what happens first? The shorts get their way, right? They go down. They should be stopping out some longs. Well, if you look, the bell opens down here. We trade down. We trade up. Look how quickly by 10:45 we're already back up to 27.86 basically, and we don't get back under that again. So the longs that did hold through that pain, right? If they were dumb enough to hold through that, they're a lot of them are just waiting to see what happens. So what happens? You get back up in that distribution. You can see what's happening is the people who were trapped long in here, some of them, right? They start just being glad they got some of their money back. So they sell, right? They say, I just want out of here. So they start selling it. They push it back down. And then you might have a few more shorts pound on as well. And then you've got the same thing that happened over here overnight, right? All these shorts that got in late, and there's some of these that you have to assume, were smart enough to be taking profits as it was falling down. But as soon as it started going back up, right, there was too many shorts in here, so it went up quick. So again, now those shorts that were trapped, they're just relieved, right? They might, depend on where they are in this, they might have lost a little bit of money. They might have lost, not too much, or they might be ahead, right? Depending on where they are in this curve. It drops back down again. They think that they're the geniuses in the room. So as this comes back in now, you stop out a few more longs, and you've taken out, right, anyone who was at a long stop. Once it gets back in here again, they're not leaving. If they've held through all this, they're staying in. So what happens is we come back up, and now you see a flip-flop of what I'm telling you. So it's the long stops that we're getting out and some of the shorts getting paid down here. Now we're flipping and flopping around this 28.10, right? We're pivoting on it. So as we come back up here, some of these longs should finally be getting paid, right? And some of those shorts should start covering if they're smart. But you can see not enough of them started covering yet. You went back in there and they thought, it's their turn. They get relieved, right? So as soon as they pop out, what happens? If they're not holding past Wednesday's session close or Thursday's session close, right? They're running out of time. There's, think about the futures contract for those traders that aren't holding past the expiration of the day, which is 4:15. It's like an option. They're running out of time to get out of their position if they don't plan on holding this. And the farther it gets away from them, the less they want to hold it. So you get a little bit of a squeeze going into close, right? Because they should have taken their money down here, and if they got in short, later, they were just dead wrong most of the day. They had a little opportunity here and there, but they got squeezed going into the close. So that pretty much sums up Thursday. So we have, again, more contracts in this zone as well, right? And so we've got basically, almost 2 million shares stuck in here, right? And you figure that out of those, it's hard to really judge. I'm sure there are some traders with some sophisticated tools that really know, but you have to assume there's probably at least a quarter of those left. So there's probably at least 500,000 shares of people in here that have positions either long or short at minimum. So what happens? We come back into, this is Thursday's close. So Friday's session starts Thursday night. We come across, we are sitting there dancing around. We start having a liquidation break down there. So anyone who's still trapped short down here is just thanking their gods, right? Whoever they pray to, they're thanking it. And it's coming back down. And at this point in time, I'm getting on the mic to do my morning trade plan. And everyone's seeing that, Sunday, we're up here, we rally. Tuesday, we drop. Wednesday, we drop. Thursday, we go back up, right? But we don't even take out Thursday's high, right? So we got, perfect, downtrend going, right? We got highs, lower high. Yeah, equal high, maybe a smidgen high, lower high, right? Definitely lower highs. And then we're still, even this high, right, is lower than those. And then lower low, lower low, lower low, lower low. So what's everyone think as we're coming down here, right? A lot of these traders that were short are in here. And what I said when I got on the mic that day, that don't forget about all these people that are still trapped between this zone, right? There's a lot of people still between 28.18 quarter and 27.97 that you're going to have to churn through. It's not an insequential amount of people or traders, right? There's a lot of trades still down here. So what's going to happen? They just want their money back. So my comment was, don't get too exuberant to the downside, because this could be about as low as we go today. And why? Because I knew there were still a bunch of traders down here trapped short. And what do? They want their money back. So you got people that trade for the day. You got people that'll hold a position for the week. There's, the day traders who will trade past the day. They're unlikely to carry the position past the weekend. So what happens Friday as we go in? So Friday, this is when we were talking, right? We shoot up, the bell rings, we shoot up, we get that squeeze. We start falling back down, we come back down to that range again, right? So everyone thinks maybe this time we'll churn through it, or maybe they're not even paying attention. Maybe they don't even know that range is there. They just think, hey, they could have went higher, they didn't, they come back down. So what's this telling you? That there's still people trapped short down here, because you can't even stay in this distribution anymore. So what happens the rest of the day? You just slowly fade up and melt up, because these traders are just sad and disappointed and covering and leaving, right? There probably was a few longs piling in as well, but that's what happened. So anytime you see a large group of consolidation and traders that goes past sessions, and if you watch volume, right, you really want to sit there and pay attention to, if you got basically as much volume over a day that trades in a day in a pretty tight range, you can really watch above or below. So you wouldn't know, could we have churned through here and went lower? Yeah, but we had to take out, all the traders that wanted in or out of their positions again to get through this zone. And there were a lot of them trapped. So That's what made the support for Friday's session. And if you look at it, it was that pivot point or that point of control, right, where the most amount of contracts went off on Wednesday. That was the low. Friday, it traded 2 ticks under it. I could look, but I didn't. There's only a handful of traders that even got positions down there. And, just think of it this way. There was some moron that probably opened a position short down there on those 2 ticks as well. So as we go back up and forth, just remember support and resistance mainly comes from where traders are trapped. So don't think, sometimes, technical analysis, depending on right, there's algorithms that trades, there's other things going on, but for support and resistance, it doesn't always have to be, one, fine line. It can be a range, right? Because this is the range you needed to chew through and watch it. So I hope this helps. And just remember that, there are traders with lots of money in these bars on the other side of the chart. They're not just bars on a chart, right? There are people with money, and people always act the same, right? If the people that were short down here, as soon as it got back down to them that were still holding, they just wanted their money back. So, and the ones that didn't take their money back because they were being greedy and wanted more, right? All they did was lose more money as the day progressed if they didn't get out from this area of the chart. I really hope this helps. If you'd like this form of technical analysis or would like to see more of us, subscribe to the channel. If you like this video for Friday's support and a little bit of review of last week and why we kind of traded the way we did at the end of the week, give it a thumbs up. If you think someone else would like this video and might get either a chuckle out of it or maybe learn a little something, feel free to pass it on to them. If you would like to see more of us, like I said, just subscribe and you'll see it. And we talk about different things. Jack will go on and do Fibonacci retracements and show you what he's seen in the fibs. I'll go through and see and show you where I think traders are trapped in positions, and I'll help you identify things like this that you may overlook. There's a lot of things that traders have to look at. So I hope this helps. I hope you have a great day, and look forward to seeing you in the future.